Good morning, everybody. It's Tuesday, August 17th. Going to run through a bunch of charts here. Here we've got the morning Kitco gold overlay chart. Yesterday we saw stair-stepping action up, and then we had pretty much a flat afternoon as it just drifted around. This morning we're getting a nice rise again. Just popped above yesterday's resistance here, but it sold back down. And I'll just show you some the daily and intraday chart of what I'm thinking for gold. Pretty much the same as what I mentioned yesterday. Here's a daily chart of gold. It simply looks, it's got that funky angle to it. It looks like a giant bear flag almost. It has broken some key resistance levels, but now it is really trading up into into this key resistance level. I think 1235, 1240, we might get a spike up into that area, and I'm more interested in shorting gold up here, simply because we've seen huge distribution selling on these big drops, big sell-off here as well, and now we're back up into the average point where most of the shareholders own a position within this kind of top range, and we're going to see people taking profits around I'm looking at 1235, 1240. I'm hoping for a spike, and we'll take a short position, but that's what I'm looking for there. When you look at this recent rally up here, it's happened on declining volume, below average volume, which is bearish. It won't take much of a big thumb to hit the sell button and for gold to have a very sharp sell-off. So that's what I'm looking for. I'm more bearish on gold here. Unfortunately, as mentioned yesterday, we had this nice kind of bull flag or pennant here, but the volume was didn't favor higher prices. It was actually showed more distribution in the flag part, and looked like it was going to roll over. Instead, we got a pop, and prices have drifted up on very light volume. And let me just show you the intraday chart to give you a better example here. Now there was, just taking a look here, we had a run up, and then we had this flag here, and there was quite a bit of volume. It doesn't look like big spikes, but there was a steady volume and some big spikes through this time frame, through this kind of pennant here. It looked like it was going to go lower, and instead we got a pop, and now we're getting this somewhat it's a nice move up, but it is actually a bearish price action, that little channel rising. And of course that channel rising is happening on lower and lower volume. As it gets into resistance, less and less people want to own or buy gold and jump in, so it's stalling out up here. So I'm going to be looking to take a short position in gold, and that could happen today or this week. We might scale in, take a small position even today, and then go from there. Now if we look at I'll just pull up the US dollar here, and then we'll move on to some market internals. Here we got the daily chart of the US dollar. We had this break of this downtrend line, lots of people covering the shorts, huge volume surge, and now we're getting the dollar is kind of stalled out, and it's reversing back down. If we take a look at the intraday chart, 60-minute, and zoom out, you can see the US dollar's formed a head and shoulders pattern, just a short-term one here. Right now it's yesterday morning it caused this little bear flag, which was great, and I expected oil to start to rise. Anyways, it drifted down through the night, sold down this morning with a little bit of volume, and now it's bounced back up, and it's stuck under that neckline. Hopefully we see prices move down. If we do a simple measured move from the neckline to the top of the head, I think this was just a bad data spike, but top of the head, we're looking at a cent and a quarter down. So here's about a cent and a quarter. So we're looking for support somewhere down in this area, which coincides more or less with near the top here of this congestion area. And for all we know, it could come down and actually kiss the top of this trend line, which we have forming. And of course, if the US dollar continues to drop this much, we're going to see oil make the spike, the jump that I thought. We'll be pulling some money off the table for oil, which, let me just pull that chart up quickly. Here's the daily chart of oil. We're starting to get a bounce today in crude off this support trend line. I'm hoping for a bounce up into the 78, 79 area. We want to be looking to take some money off the table because I think it's just going to be a brief pop and then it'll head back down. So once we do get this move up, it's important to move our stops to break even so that we're not risking anything, and then hopefully it'll continue up and we can pull some money off the table, and then we'll move our stop up even more, hoping for an extended move. If it rolls over, then we'll get triggered out with a small profit for the balance of the position. Now if we take a quick look at the intraday chart of crude oil, you can see the price action here is it's come down, it's starting to round out, and now we've got this nice pop. Problem is I don't see any volume behind it, which is somewhat of a concern. Usually you want to see big volume behind the move. This is a nice move, it is forming a bull flag, but again it's lacking the volume, and I'm worried that the dollar will pop and then this will just drop right back down, fight for a while, and then continue lower. So that's my concern. When I don't see volume, I'm worried that it'll just give it all back within. You can see like a bar over here. It just takes it right back with a sell order. So anyways, it is reversing. It is trading up above first resistance point, and it is looking good so far. Price wise, volume wise, we're lacking there, but that might step in later today. Okay, so now let's jump to the market internals and the SP 500. This is the daily chart. You can see yesterday we actually had a reversal candle, and I was hesitant. I was debating whether to go long at the close and catch a move up, and the SP has moved up a little bit through the night. Problem was there wasn't a whole lot of volume down here. Usually I like to see a washout, some good volume on these pivot lows, and then see it get pushed up with some strong buying. I didn't really, the volume was really light yesterday, and it didn't really confirm that it was a pivot low bottom. Not to mention we're under the 50-day moving average, we're under the 5-day moving average, we're pretty much under all the moving averages, which isn't a good sign. So I thought we'd sit out for that one. It's up a little bit this morning, still trading within a resistance level. Let me just pop up a 60-minute chart. You can see it's got a similar price action as oil. It's starting to round out, and it's broken above a couple previous highs from yesterday. It's starting to stair step its way up. It's going to have pretty major resistance up here around the 88, 89 area, and I'll show you the market internals, which are what have me somewhat concerned here for lower prices. Okay, so the chart on the left is the put call ratio. Of course, if it's over 1, it means there's more puts being sold, so people are expecting lower market. When it drops down into around this range here, people are buying calls expecting the market to go higher. And yesterday we saw it drop off pretty good, and it's down near the lower end of its range. It's not down way down here, but previously if we zoom way out, this is pretty much the standard level here. Anyways, it's dropped down to that level. People are buying more calls than puts, expecting the market to go higher. If we take a look at the NYSE advanced decline line on the right, we've had lower highs and lower lows. It's been grinding its way, trying to hold its way up here the past 2 days, and it's not all the way up here in overbought territory, but it's grinding up there. With today's gap up, we're probably going to see it open around the 1700 or probably 2000 advancing stocks, which will put it in overbought territory. And of course, put call ratio saying more people are betting on the upside, which means we're probably going to see a drop. So we might be looking to short the market today, possibly at the open. I'll just want to see what the early morning volume does. Maybe a trade after 10 o'clock once the first half an hour's move through. We'll see if we can short the market, and we could see this drop all the way back down. We'll see nice selling volume, and of course people will start shorting the market again, buying puts, and of course that'll help add some fuel to the fire. So that's what I'm looking for there. The market, and this is the reason why I didn't really want to buy yesterday, is simply because the market was kind of giving mixed signals. We had a reversal candle, but showing that we should be buying, and then the market internals were saying, well, we're kind of overbought. I don't know if you want to do that. So of course they kind of cancel each other out, which is why I sat on the sidelines and I'm hoping we can get a short position. One catch is this week is options expiration, and money tends to move in to the market to push it up, and I think that could happen this week. So we may not short the market today. We're going to see how strong the move up if we break some key resistance levels on the SP 500, which of course is, if we can break this morning's high, which is around the 85 1085 area or 1090. If we see big volume surges, then we'll play it by ear. We might actually go long, but I'm looking more towards the short side because the market will be extremely oversold. Anyways, that's it for now. I'll talk to you guys later. Bye bye.